One of the most important dates on the calendar of any bank right now is the 31st of March 2026. Why did I say that's an important date? Because all the banks are literally trying to find out how they can meet up with the recapitalization deadline of the 31st of March 2026. These are the conversations where we'll be having on this episode of Market Watch, brought to you by Nairametrics Television. We're also going to be taking a look at what is happening in the pharmaceutical industry, MeCure to Fidson to Neimeth, all these companies doing crazy numbers in the pharmaceutical industry. We're going to be comparing some of these companies, and also on a final note, we are going to be taking a look at what is happening as regards the bottom line performance compared to other banks in the banking sector. All these conversations on Market Watch, brought to you by Nairametrics Television. My name is Frank, and I have some gentlemen with us, our analysts for the day. Ugodre, you're very much welcome.
Thank you very much for having me.
Idika, you're welcome too.
Thank you very much, Frank.
Let's start with the banking sector. 31st of March 2026. Very, very important date in the banking sector. What's your take about the recapitalization? Let's start with which banks do you think would top the Capital League table?
Yeah, so as you all know, Central Bank 2 years ago gave banks a 2-year deadline to meet the recapitalization requirements.
Yeah.
And there are, I think, 4 tiers. I think there's a tier 1, 500 billion for banks that are international banks. And then you have the 200 billion, which is the next tier, which is for national banks. And then you have the 50 billion for regional commercial banks and 20 billion for non-interest banks that are national or regional. So what it means is, banks can play, you don't have to be an international bank. International bank means you, apart from operating in all regions in Nigeria, you can also operate outside Nigeria. And there are some banks that are in that category.
Very true.
And then, of course, the national commercial bank is that you don't have intentions to play outside Nigeria. You just want to play internal. And that's what really obtains in most countries in the world, right? So, in the US, people probably know of JP Morgan, Bank of America, but there are thousands of other banks that people don't even know about.
Yeah, true.
Because those don't just operate within, within the region. And so here in Nigeria, this is basically what they're saying. And so banks have been raising capital, right, over the last few years. Some have essentially cleared their capital raising requirements. They've met the amount itself that they need to raise. And what's interesting about this capital raising is that it's not the entire, to the CBN, capital is now just ordinary share capital and the share premium of the bank. So typically when you look at a bank balance sheet or a company balance sheet and you look at the equity side of it, it's the ordinary share capital, share premium, retained earnings, reserves, and a whole lot of stuff, right? But the CBN basically discounting the other ones and just focusing on share capital and share premium. And so apart from that, the CBN is also saying that for banks that are holdco, that's holding companies, financial institutions, their share capital must be more than the sum of their entities.
Oh.
Yeah, so that provides a different dynamic as well. And that is why this capitalization table is very important. And I think Idika has a list of those tables, and so maybe we can go through from the bottom to the top?
The man of the numbers. Let's take a look at some of them.
Well, like Ugodre really mentioned, that's an important aspect of the banking sector. And I think we've seen an increase from I think 2.7 trillion in 2023 to about 3.7 trillion. Different they have read so far, and 3.74 trillion as at Q3 2025. Now, if you look at
all the figures, have they raised all the
figures?
No.
So these are like all the banks, right?
All the banks.
That's a huge number. So they've gone from like 2.9 trillion to 2.7
trillion. Trillion. And when you, if you maybe change it to dollar, when you value from that dollar perspective, you have about around $1.9 billion as in 2023. Now 2.5 billion dollars as at Q3 2025. You can see the increase there.
Yeah.
Then if you go down, like he really mentioned, we have 500 billion, we have 200 billion for national commercial bank, then we have 50 billion for regional. Then if you go down, I think Zenith Access, GTCO now dominates the capital ranking.
Yeah.
Zenith Bank boasts about 590 billion.
It's Zenith.
Right now, paid up equity well above the 500 billion that is expected of them. Then GTCO too has crossed that hurdle. Then First Bank, UB and Fidelity, I think they have between 300 to 400 billion, which they are still in the market, and they are definitely going to
surpass it. Do you think they surpass it?
Yeah, sure. So specifically in absolute terms, Zenith Bank has about 614.6 billion.
Yeah.
Assets 594.9 billion. GTCO 507.6 billion. You can see they have already met the requirement. Then First Bank holding about 398 billion. Then Eco Bank 353.5 billion. So on. Then UBA, like I mentioned, UBA is about 250.1 billion. Fidelity Bank 205.8 billion. Then Stanbic 255 billion. Then Wema Bank 210. You know, Wema Bank is a national bank, so already they are good to go.
Oh, they are within
they are
within
good
the
to go.
purview of the
So Sterling Bank 157. Then Jazz Bank 28. So these are the breakdown of how far the figures, how far they have gone.
It's going to be very easy for you because my editor is going to put the table on the screen, so you'll be able to understand these numbers, because sometimes when we're calling them without you having a view of how this is on the table, you might not be able to grasp the idea. But I want us to go into analyzing some of them. And I have this is a personal question, by the way. I want to talk about access. What's your take about access? There are conversations around the fact that you spoke about holdco. Look at access. Look at First Bank, First Holding Co. And if you look at GTCO, you were trying to analyze between Holding Co. and a Holding Co. being a sum total of its subsidiaries. Mm-hmm. What is the policy regarding those holdcos? No,
so a holdco or a holding company, from a banking perspective, is a financial institution that owns not just banks, but owns other financial, institutions, no pun intended. So whether it's, for example, Access Corporation is the holdco. So Access Corporation owns Access Bank. Access Bank owns most other Access banks within Africa, right? Then you also have Access Pension, Hydrogen. So they have a lot of subsidiaries on that corporation. So it's a behemoth of a financial institution. First Holdco as well also has, owns First Bank and owns all those FBN related companies, which I think they've also changed the name, First Asset, First Trustee and all that. So those are the companies under the First Holdco. Yeah, but there are conversations that the Holdco is not really a true representation of the subsidiaries as regards the value. The market capitalization. It's supposed to be, some of them look like it's undervalued. Yeah, so that's a different conversation because and it's not just for banks, it's for most holding companies or most conglomerates. You tend to see that the sum of the parts, right, is usually undervalued when you compare it to when they're all standing alone. Right? Yeah, because sometimes hidden gems are just all over the place. So you really because you're just valuing the entire entity, there's certain subsidiaries that if you had valued them alone could be higher. And one of the most popular cases of this was Yahoo. There was a time Yahoo owned majority significant shareholding in Alibaba. So the shareholding that Yahoo had in Alibaba, right, because of Alibaba's valuation. So if you check the value of that shareholding, it was more than the entire valuation of Yahoo, right? So, and that's the thing with investment. But you know what? It's all part of how, valuation, works. And so, yes, there's an argument that, as much as holding company makes a lot of sense, sometimes the downside is that most times the entity does not really reflect the full valuation that it has, because there's so many of these entities, these banks, that their subsidiaries, if they were startups, will be unicorns, right? But,
true.
But
True.
As a holding company, there are very few of them that have unicorn status in terms of valuation.
True.
Valuation is unicorn. $1 billion is like 1.5 trillion naira now. So it's not all of them that have those kind of value. In fact, most of those banks, most of them are trading way below their valuation. In fact, Zenith, which is not a holdco, is even trading at 50% of its book value, which is just ridiculously cheap, right? And most of them are trading like that. So yes, that's the argument around it. But the point is that the banks have all raised significant amount of capital over the last, year and a half. And from the table we're seeing, it appears the largest bank in Nigeria by equity or by, as CBN calculates equity, is Access Bank.
Access Bank?
So I beg your pardon, Zenith Bank.
Zenith Bank
40 billion,
about 640
and then Access is next with 594 billion.
That's true.
And then GTCO at 507 billion, then First Holdco 398. I think First Holdco would also cross that 500 billion. I suspect UBA as well will cross that 500 billion rank as well as we go on. But the point is that they've all raised capital, and next year they'll have to deploy that capital to maybe lending and a few other things that
I think that is where I always feel somehow in terms of when you talk of lending, we actually have the channels where they are going to deploy this huge amount. You can see what is happening in terms of credit squeeze. Banks have been piling up their cash with CBN under their standing lending facility. So we actually have these channels. Because now, remember, this is not just retained earnings. We're only talking of share capital, ordinary share capital, and share premium accounts, share premium. So would they be able to have that channels to deploy these resources? That's another angle, and I don't really know. Then again, if you look at, with the raise, definitely it would increase their standing shares. Which will equally impact on valuation. So that means the banks have to earn more to be able to sustain.
Which is why we think they will earn more anyways.
To be able to. So, but it borders on deployment of the funds.
It's also very dicey because most of their earnings comes from interest earnings. And look at what is happening with MPR. So MPR dropping, their interest earnings, it will have an impact on their interest earnings.
Yes, it will. So that's why they need to lend more, because as MPR is dropping,
increase the volume of lending.
Lending.
Okay, and that will reduce their impairment because
but if you're increasing the volume of lendings, the cost on servicing those
so
loans
that's what you call the net interest margin. So you'd expect that their NIM or net interest margin would also increase as well, because as rates are coming down, they still will keep that same buffer that they have between lending rate and deposit rates. And so once they're able to keep that, then margins might drop a bit. We suspect next year, because as lending rate drops, deposit rate might not drop that much, because deposit rates are down anyways. So margins might compress a bit, but banks would likely make up for it from the volume of loans or transactions that they're able to do. The sort of size of balance sheets they have.
Then you qualify factor in the payments, because if
they've taken it down a lot of payments already.
And with interest coming down a bit, that will equally help the bank to at least ensure that you don't have much default, because if the rate is coming down, at least people will definitely like to repay their loans, which is no more expensive. So if you look at their maybe interest income after impairment, that will equally help them.
All right, so we're taking a look at the pharmaceutical industry now. What is really happening in the sector? Comparison between Fidson, MeCure, and Neimeth. Let's take a look at some of these companies. What do you think? Let's look at the contrast between the revenue, the profits, and How sustainable do you think they can carry this along? Let's talk about them. The man of the numbers.
You look at their revenue, that's their 9-month revenue. In absolute terms, Fidson is leading there. He led them, at least he has about 159.73 billion in revenue. Then, but when you look at the growth, MeCure did better with about 99% growth. But if you look at Neimeth too, you look at it, that's the small boy among them. He did about 5 billion revenue and achieved about 62% revenue growth. You can see the growth. They did very well relatively, and I think it is okay. And if you look at the drivers, basically their major products. So which I feel that is likely to be sustained. They can sustain that revenue growth.
What are their major products? What do you think are their major products? Because you made mention of that now, saying their drivers. Is it some of them are these
products are grouped. They have what they call acute. They have OTC. OTC product, the acute product. So these are the two major products they have, and these are essential products, and likely you can't do without it. More or less, I see them as a defensive stock. But whatever happens, you must consumers must take them. And they are of recent now, because I know of recent now they have waivers in terms of their raw material, bringing their raw materials given to them by federal government, which is actually helping them too.
Just to chime in as well. So for most pharmaceuticals, they have different segments, revenue segments. So some OTC, ethical drugs, and all of that. And so these are the pharmaceutical companies that are listed on the exchange. Neimeth, interestingly, has been listed for years, probably one of the oldest of them. MeCure was just listed a couple of years ago.
2023.
And then you now have Fidson, which has been there for a while as well. You also actually have Pharmaceutical. I don't know if they're still listed, but not really been.
No, they're still there.
They're still there. They're also listed. But of these three, what is interesting from the analysis is the growth in their revenue over the this 9 months. So Fidson has seen his revenue up 56%, right? From the same period last year. Fidson is now doing 93 billion in revenue. So Fidson, at the rate they are going, it's going to be solidly in there as an NMX 100 company because they are already doing over 100 billion, right? So MeCure also has seen his own revenue double to 60 billion naira. And then Neimeth, like Idika said, is also up 60% to 5 billion. So Frank, what that means is that most of these drug companies have actually seen their revenue go up. So, and from the breakdown of the analysis, it's a bit of volume push, but also price increases. And that's the interesting thing about what we've also seen across manufacturing sector. I think what that exchange rate devaluation has done is it sort of made imports a lot more streamlined. So it's not everybody that imports again like before. So the few companies that import have better control of price and market access. Right. And then why the manufacturers also sort of have better control of their market, maybe for now, because all around we've seen revenue go up, and that is also evidence of the inflation that we've seen over the last few years as well. Because look at all these numbers. So as revenue is going up, it's all because prices have also more than doubled or tripled, and I think Nairametrics has reported that severally in several articles. So that's basically it. But in terms of revenue, I think MeCure won this. I think MeCure had the highest revenue growth of 99%.
In terms of growth.
In terms of revenue growth. So compared to Fidson. So MeCure won the revenue battle.
All right. So let's take a look at their margins. What do you think about their margins?
Well, margins, you have the gross profit margin, you have the operating profit margin, I have the net profit margin. At that top level, the gross profit margin, it was very, very It's okay, wonderful. But where I think they have problem is in net profit margin, which really drop, at least trying to explain that, okay, they have cost pressure there. Because if you look at Fidson, for every 100 naira revenue they made, at least they are just returning about maybe for at that gross profit level, have about 41 naira from it. You can tell you that, okay, that gross profit margin level is okay. But if you go down, you can see most of them are returning just between 8 naira for every 100 naira to 6 naira. So it tells you that, okay, you have pressure there.
Idika is always very technical. So
the
bottom line of the English is basically saying is that, and that's the point. So as much as their revenues have gone up, right?
Yeah.
Margins are squeezed. And if you speak to most pharmaceutical companies, they will tell you that, yes, they've increased prices, but cost of doing business is very high for them.
Yeah, true.
Right? So they are paying a lot. And from the analysis, you can see whether it's overhead, whether it's finance charges, they're paying out. So that's essentially squeezing out their margins.
Yeah.
So that is why if you see Fidson, for every 100 naira, they are keeping 41 in gross profit.
In gross profit,
right? That's the direct cost.
That's direct cost.
Then when you now go down, by the time you net off overheads like salary, marketing and distribution costs, because you gotta be able to, if you manufacture your drugs, you have to take the drugs up north and everywhere and all that stuff. Then you have to pay banks, their loans, high interest rate, which is back to what we were talking about before. They're only able to keep 8 naira 60 kobo from every 100 naira that they sell. So you see, they did increase their sales by almost double.
Almost double, yes.
Right? Or something percent for in the case of Fidson, but they were only able to keep, 9 naira of every 100 naira. MeCure was only able to keep 7 naira 40 of every 100 naira. So it's simple English. If you sell this mug for $100, but your profit here is only 7 naira. So the 93 naira has gone to who? To the person who supplied you the mug, and all the people who were involved in distributing the mugs, plus whatever salaries you need to pay and blah, blah, blah. Yeah. So that is what you call a margin squeeze. So as you can see, margins are tight for all of them. And I think the winner here was Fidson, even though Fidson was able to keep 9 naira for every 100 naira of revenue. While MeCure was able to keep 7 naira of every 100 naira. Then the last one is
Neimeth is about 6 naira.
6 naira, 80 kobo thereabout of every 100 naira. That's what they're able to keep. So as you're saying that margins, revenue is up, margins are squeezed.
Yeah.
So let's take a look at the final question now. We're taking a look at FCMB. Yeah. Why did it take so long before releasing their results?
Well, good question. So FCMB is a holdco as well, right? So it's a group, it's a holding company. And I think they were just like Access, they were also caught up in that rule of their combined shareholding of subsidiaries must not be more than the holdco.
Sure.
So I think that delayed their results a bit because of CBN reviews and all that. And that's also what happened to Access as well. So Access one was delayed. I think Fidelity one was also delayed as well.
Yeah.
And they also just released also a week ago or 2 weeks ago. And then some of these banks are also in the process of recapitalization. So, when you're raising capital in the middle of your results announcement, that can delay it because the capital that you've raised, you need to include it in your balance sheet. And so CBN has to approve that capital that you've raised as you're including it in your balance sheet. And that can really delay the results. And that's why you've seen the results delayed. I mean, because we know that this result would have been ready since like October when it was due. So, but that's the reason why you've seen that delay. But I think going forward, a lot of these delays won't be there anymore. But that's I don't think there's any other bank that is yet to release. I think FCMB was probably one of the last of the banks to release.
I think Fidelity has released
their 9 months numbers.
Wanted 4.5 billion.
That's the reason.
So, what do you think drove their performance? Do you see them sustaining it into Q4? By the time Q4 result comes out.
Yeah, if you look at the result, basically the interest income.
Oh, interest income.
Yeah, interest income. About 46% growth in interest income, at least driven by interest income from loan and advances. Though that loan and advances to customers declined by 3%. So if you look at maybe because of higher interest rate environments. So the result was driven by growth in interest income. So even if you look at the non-interest income, where you have the net trading gain, they didn't do quite well. It dropped, but fees and commission income equally did very well. But only that their net trading income in terms of foreign exchange gains dropped. But all the same, they did very well.
From an investor standpoint, do you see them? Do you think they benefited extremely well from the high interest environment that we have?
I mean, most banks have benefited well from that.
And that means it will affect them as the rates are dropping.
Yeah, which is basically what we also said earlier.
Yeah.
Last year banks benefited a lot from FX valuation. Yeah. So this year the story has been interest rate differential. So the difference between their lending rate and the savings rate. So, and most banks have just essentially, put a lot of that money in fixed income securities. So just give it to the CBN at 20% plus. So nice piece of business for a lot of the banks. But let's not also forget that they also have a downside, which is they also took a lot of impairment this year. So because they made a lot of money, CBN also ensured that they wrote down some of those impairments so that they don't start to share dividend amongst themselves and all of that. So, but nevertheless, FCMB's bank, since that's the bank we're talking about, the FCMB's result seems to be pretty good. Gross earnings up 41% to 828 billion. Net interest income more than doubled to 350 billion year on year. Solid numbers. Net commission and fees up 35% to 56 billion. And then they also took an impairment charge. The impairment charge was higher, 28% to 57 billion, which is what I spoke to. So all in all, pre-tax profits up 46% to 134.5 billion naira. So solid numbers for FCMB in terms of pre-tax profit year on year. Deposits was also slightly high at 4.39 trillion as well. But lending sort of dropped a bit, 2.9%, which is also part of what we're saying about most banks. So their lending was 2.9 trillion. So their lending to deposit is almost 50%. So solid all-around numbers for the bank. And to your point about valuation, it appears the bank, based on these numbers, is slightly undervalued. I think it's trading at maybe 10 naira per share or something like that. Yeah. And for a bank that is in the middle of a capital raise, there are opportunities, out there for investors. One of those banks that you might look at and you say, maybe there's one opportunity for us to sort of dive in. But strong numbers for the bank. So I guess the wait was worth it. But interested to see how they pan out at the end of the year. There's still a lot of challenges. There's still headwinds. We don't know if there's more impairment to be taken. But I think the bank had mentioned, if I remember, that they intend to exit the forbearance by the end of the year, which that cloud that is hovering over some banks. So they intend to exit it by the end of the year, which means that essentially paves the way for dividend. And when a bank doesn't pay dividend, it has a way of affecting the share price. And so that's part of what we're going to look at. So in terms of FCMB results, solid numbers for me. I don't know what Idika thinks, but I think it's good.
Buy, sell, or hold?
Yeah, I think the result is okay. Very, very impressive. Even when you even look at the balance sheet, drivers of the balance sheet, I think they have a chief fund there. Look at the customer deposit, which is about 61% of the total assets.
Yeah, true.
So it makes sense. At least, they have chief funds to play around and add to their share capital and share premium, which are growing. So to me, it's a good position.
It's a good position. When you hear an analyst tell you that, just know that that is in some way, maybe an investment advice or not, it's yours to determine. But definitely that gives you an informed perspective as to how to approach the market. FCMB, the results out, we spoke about that. We also spoke about the pharmaceutical industry and then the recapitalization deadline of March 2026. All these conversations on this episode of Market Watch, brought to you by Nairametrics Television. We do this every Mondays and Wednesdays where we dissect issues bedeviling the markets. This is Market Watch. Cheers.